Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, October 13th, 2015. Well, folks, let's talk a little bit about the S&P 500 today. Here's the chart of the SPY on the intraday 10-minute time frame. Now, the key here is to look, markets are down slightly on the day, but ultimately what we've seen lately is the beginning of what I expect to be a pullback in the market. The reason I say that is because ultimately we gapped lower today on some negative Chinese news. Markets then floated up on extremely light volume. Yesterday was insanely light. Today's very light again, although a little bit heavier as it's not a holiday here today. But look at the move up, and then look how we came right into this double top, and there's a down-sloping trend line I want to show you as well on the 60-minute. Take a look at it right now as I bring it up. And again, just waiting for that to pop up. There it is. Take a look. Pivot high to pivot high, and then right through these highs. So this area is a huge level of resistance, and the markets are starting to give way here and starting to fall down. Now, you might say, well, why did we rally up early? Well, partially the light volume, partially positivity, buying, short covering, whatever you want to call it, that was leading the markets up. Now, what's leading the markets down here? The essence of it is something that I think could be the next key catalyst for downside and fear in the market, and that is basically Fortress Capital, FIG, I believe is the symbol, came out and said they're shutting down one of their flagship funds, one of their hedge funds, and this is a big hedge fund here, folks, and it's shutting its doors because they've taken some heavy losses in the last month, 2 months, and my projections are that if there's one cockroach, there's many cockroaches, right? There's many issues out there, and the market, in my opinion, is starting to realize that. The news came out when the markets were right here at the high, and you've seen just a slow sell-off, and now a little bit of a pickup and sell-off as people are starting to kind of realize what I'm telling you right now. So again, folks, I mean, think about what's going on here. China's collapsed literally from over 5,000 to under 3,000 in terms of their market. Europe's a mess. We've seen the U.S. all of a sudden get wacky. We've seen commodities and currencies go nuts. There's a lot of hedge funds that are probably in deep trouble. And could Fortress Capital be the first collapse? Could it be the first fear factor here? My thought process is yes, and I think you're going to see more downside. Now, again, it's something that probably won't catch on right away. You'll see some choppiness down in these range. What you're going to look for is, do we take out the lows of the day right here? And do we then take out this pivot low here on the 200 MA and start heading lower? But again, watch today's price action, folks. We're not down much yet, but this could start to snowball into a little bit more fear factor. Take a look at the VXX, which is tracking the volatility index. Early in the day when the market gapped lower, it went down, and as the market rallied, and then now that the markets are selling, look at how it's making a new high of the day. That's a very bullish sign for volatility right now, and the VIX itself, again, spiking up a little bit here under this condition right now. So there's some big factors here, folks. I told you yesterday in my video to look to short the markets. I'm still in that camp. I think here you want to start to accumulate shorts. Don't go all in, but just slowly start to accumulate, and I think you could be in for a very happy next week or two on the market pullback side. Again, I don't know how deep we'll pull back, but again, we'll watch and see how it plays out. Today after the bell, keep an eye on earnings. Goldman Sachs not reporting earnings, but look at this little reversal on Goldman. Had a real strong day, now only up $1. After the bell, JP Morgan reports, and look at this sell-off on JPM, really coming in pretty sharply. Why would the financials be getting hurt here? Well, because a lot of these financial firms back some of these hedge funds. They give money to these hedge funds. They give them, margin. And in all fairness, some of these hedge funds some of these institutions actually have trading programs, trading desks. So there's now fear starting to develop. Could there be some heavy losses in some of these hedge funds or some of these big banks, JPM, Goldman Sachs, when they report earnings this week? And I think that's why you're seeing these big reversals. And I think that's fantastic in terms of seeing the reversal there, and it really spells out what the markets are starting to fear. Intel also reports after the bell, guys. Intel is kind of right around the flat line. It's had a big move up, so it's hard to gauge on the daily chart where this earnings report is going to go. You got a little bit of consolidation here, but it is extended, so I'm just going to rate it as a neutral and a wait and see on earnings, all right? A lot of stocks overbought short term. I expect a pullback, and again, folks, keep an eye on the spiders. The spiders, the SPY is a tracking ETF. If we flip back to the 10-minute chart, you can see continued little bit of pressure coming down here. Double bottom's your first support, then the 200 MA on the 10-minute chart is your second support. All right, bottom line is, guys, this is where it's at. You want to ultimately come join us at InTheMoneyStocks.com if you want to make money. All right, hedge funds literally down. I mean, that Fortress Capital Fund was down close to 20%, guys. I want to just show you something. All right, take a look. Research Center, you want to see the track record of the Research Center, third-party verified. Come down here to the bottom, click on track record. This is verified. Every trade we've entered and exit is listed here, all right, on our track record. And look at the net gain, 764%. Now, again, you'd never put all your money in one trade, and that's how you get 764%. Instead, what you do, let's say you're conservative and you put just 10% of your portfolio in each trade, that's still 76.4% profit. You're up over 75% in the Research Center. And think about these hedge funds, man. I mean, it's insane. Absolutely insane. They're down literally 20%, and here just a conservative investors up 75% on the year. Track record for the options is listed right on the options page. Look at that, 3,000+% gain. Again, just assuming you're only putting 10% of your portfolio for options in there, you're still up 300%. Every trade verified, third party. Look at that, guys. Unbelievable. Absolutely spectacular. And again, my suggestion, if you're an options trader, it's a no-brainer to be in the options. If you're a swing trader for stocks, the Research Center's for you. If you do both, you're making money if you do both either way. All right, guys. Enjoy. Thanks as always. Come join us at InTheMoneyStocks.com.